Good morning, everyone, and welcome to Weekly Profit Talk. We do this every single week, hence the name. We do this Wednesday morning at 8:30 Mountain Time, which is where we're located. That would be 7:30 for you West Coast folk and 10:30 for the East Coast. So, good morning, welcome. This week's topic is why a doctor's bookkeeper and tax preparer need to talk. Um, this kind of sounds like a no-brainer, but it's something that has crossed my mind lately. Um, as we do taxes for a number of people this time of year, of course, we're well into tax season. So I want to touch on the importance of communication and why the tax preparer and the bookkeeper should have a conversation with each other. So let's begin. Why don't we? The power of communication. Okay, that's where we're opening. Um, As a physician, you wouldn't refer two different specialists treating the same patient without having them share notes with each other or sharing your notes with them, right? So, why is it that most physician-owned practices basically handle their business financials in this way? You've got a bookkeeper that's basically putting together books for you, but they are basing their transactional analysis on the unique reporting requirements that you give them. Tax preparer might need things to be called a little bit something different. So, um, and if you basically turn over a series of books to a tax preparer in the winter, as it is now, um, things can slip through the cracks pretty easily, as it says here. When nobody bridges that gap, you're the one that pays for it. Okay. There's an archaeology problem here. And that is what you think it is. If you're thinking Indiana Jones and taking layers off of a site to see what history reveals under the dirt, it's kind of the same thing. Your tax preparer gets books tax season. They're not advising you; they're excavating, just like this says. You're digging through 12 months of transactions, trying to get questions answered that could have been answered the previous summer. That is not a really good strategy. And you didn't build a thriving practice to pay someone to perform financial forensics once a year. That could actually be costing you more money with your tax preparation. Indeed, I would not be surprised if that's the case. So here's the bare minimum of what you should be doing. Okay. If you are going to owe more than $1,000 in tax that is not subject to withholding, and if you're running your own practice, you almost certainly will, unless you give away your services, then you actually need to address your taxes in a quarterly fashion and not just once a year. So, in any event, I'm sorry, something, yeah. Um, You have four estimated tax payment deadlines each year. They occur in April, June, September, and then the following January. And yes, I know June's only 2 months after April, but that's just the way they've done that. We believe the third quarter September payment comes right before the end of the uh, federal government fiscal year, which, believe it or not, actually ends on September 30th, not December 31st. Fiscal year runs from October 1st. You may recall, actually, we had a little bit of a government shutdown problem right around September, October. Well, that's when the fiscal year actually ends, and they do continuing budget resolutions and, cook things up to do in January and February, and we're actually under a little bit of a shutdown right now. Um, over a point of law. I think it's got to do with ICE enforcement, but in any event, um, these are basically as a result of continuing resolutions. The fiscal year for the federal government is actually October 1st to September 30th, and that's why we believe that the third quarter estimated tax payment is due September 15th. So they've just moved September and June up a month to make that fit in so they're getting more of people's money, theoretically. So you should, in any event, be looking at your tax situation 4 times a year. And that means sitting down with your books, uh, estimating your income for the entire year, And that's simply a matter of a factor, just multiplying. Let's say you're doing June's, for example. So you're going to have 5 months have elapsed, January through May at that point. So that's 5/12ths of the year. If you remember from middle school, reciprocal of 5/12ths is 12/5ths or 2.4. So you multiply your 5 months by the 2.4 and you have an estimate for your income for the entire year. Figure the tax on that, multiply it by 5/12ths to get a tax amount, subtract the amount that you paid in April, and there's your estimated tax payment. So your bookkeeper and your tax preparer need to be on the same page at least 4 times a year. How many of you nice doctors are doing that right now? Um, Here's some questions to consider. Are the books current and reconciled through last month? How does year-to-date net income compare to projections? What about major purchases, capital investments, new hires? Um, there could be changes in revenue, and we all know that you go through revenue cycles. Does your current estimated payment schedule still make sense? Um, Now, as far as that goes, scheduling is really just a matter of knowing when the dates are. You should be performing the calculation as I just explained it. Um, all four estimated tax payment deadlines. The end of year one in January is easy because, first of all, you're by then you should have a solid end of year profit and loss statement. You know what your income is. So you estimate your tax, then you subtract all the payments you made in the previous three estimated tax payment deadlines, and voila, you have your final estimate. You'll owe less than $1,000 when you file your taxes, and all of a sudden you're looking forward to tax season instead of dreading it. So now here's a idea I'd like to share with you because this is what we do for our clients, and you can have this in your life too. What if you had the power of integration working for you? What if you have an advisor that's handling both of your bookkeeping and your tax strategy and doing it all as one operation for you? You don't have to wait until March to discover that there was a problem with the books in August because you got the same guy working on everything with not only your estimated tax payments, but your final tax obligation in mind at all times throughout the year. Estimated payments are calculated from real data, not recycled numbers, and not the whole, here's what you owed last year, divide this by four and make monthly, quarterly payments. That way lies disaster. First of all, the quarters aren't even. You got a 3 month, a 2 month, a 3 month, and a 4 month. So dividing by four makes zero sense, even if your business operated that way. And tax season becomes a formality instead of a fire drill. Imagine, if you will, a tax season where you're not dreading it like a trip to the dentist to get a root canal, but instead you're looking forward to the measure of the metrics that it certainly should be. You get the final scoreboard of how your business did. You owe less than 500, well, ideally less than $1,000 to the federal government as well as your state if you are in one of the 41 states that has an income tax. Uh, Nine of you don't, at least on 1040 income. So lucky you. But that is to say, how would you like it if you know that you're going to owe less than $1,000 in tax when you actually file your taxes? You're not, don't have any stress, don't have any installment agreements with high interest payments. You don't have to wipe out your savings. You basically look forward to tax season. And you're able to do that if you've integrated all of your operation under one roof. This is something that we'd like to take an opportunity to talk to you about because this is exactly what we do for people. I'm sorry. I guess you're getting to see the behind the scenes screen there. So if you are interested in having this sort of integration in your practice, we are coming to you live on one of three different media, LinkedIn, YouTube, as well as Facebook. And in all three of those, you've got a power to make a comment on the video. If you say help or call me or more information, we will get back to you within 24 business hours. That means if you are writing a Saturday morning, we'll get back to you Monday, okay? Because honestly, we do try to take our weekends off, but nevertheless, we'll reach out to you in a reasonable period of time and let you know how you can book a free call and talk to me directly about how best to maximize your tax savings and also your profit and your cash flow in your business. and also have a firm grip on your tax situation throughout the entire year. No more of this second guessing. But at the very least, I hope you're able to take away our topic is that if you do still employ a bookkeeper and a separate tax preparer, at least ensure that they're having a conversation with each other each quarter. Okay. So with that, I hope you're having an amazing Wednesday and tax season so far. If you're in one of the states that got hit with all that snow, then please stay safe, warm, and dry, and have an amazing rest of your day. And if you have a chance, do something randomly kind for a stranger today. So until next week, we will see you Wednesday.